What's up guys, my name is Kenta, and in today's video, I'm going to teach you how I read market structure and how you could use it to not only increase your chances of trading with the trend, but also increase your risk to reward ratio so that you could become a more consistently profitable trader. What's up guys? So if you want to increase your probability of trading with the trend and you want to increase your risk to reward ratio, then you need to understand how to read market structure. And that's what we're going to be doing today. I'm going to be going over basic market structure, how that looks, and how I read basic market structure, top-down analysis, why that's important, why you need it if you want to trade with the trend and also catch a larger risk to reward ratios. And we're just going to keep it simple as possible. All right, guys. So basic market structure, there's a few things that you want to consider. All right, so that's trends and ranges, impulse moves and correctional moves, support and resistance, and all of these things are going to tie into together. So bear with me here. When it comes to trends, we have our uptrends and our downtrends. The uptrends are a pattern of higher highs and higher lows, higher highs and higher lows, and our downtrends are a pattern of lower lows and lower highs, lower lows and lower highs. Okay. Now, in market structure, we also have our ranges, which is basically just having a resistance level and a support level and having price bounce in between those levels and not being able to break out of those levels. Okay. Now, we also have to consider our impulse and correctional moves. All right. So in an uptrend, our impulse moves are larger than our correctional moves. And the reason why we want to consider this is because we're going to be taking trades on our impulse moves in the direction of the trend. That's what we're looking to do. Okay. And when it comes to our downtrends, we're looking to take impulse moves to the downside. And that's what we're aiming for. Okay. So on an uptrend, what we're really looking to see with support and resistance is we're trying to see a resistance level being tested and then broken, and then having that resistance level flip as support. So once we have a confirmation of an uptrend, we're looking to see a point where resistance is becoming support. Okay. So for our long entries, we're looking to catch the retest. All right. So once the resistance has been broken and it's turning to support, we're looking at a minimum to catch the retest on that support. That's like the simple way to put it. There's obviously other things that we want to consider when taking, entries. But the basic understanding when it comes to market structure is that at a minimum, we're looking to catch a retest of a previous high or catch the retest of a previous low. All right. When it comes to setting our stop loss, we're looking to either set it under the higher low, or we're going to set it above the lower high. All right. So it looks like this. We're going to have a minimum of 3 to 1 risk reward ratio. And on a downtrend, we're looking for the same thing in the opposite. Once the support is broken, and we're looking to retest that support area as resistance. Okay, so we're looking to catch it on the retest, not any sooner. We're looking for an area that's been tested multiple times and has a high probability, so that we can make sure that we are in a downtrend, and also that we're going to have a high probability of catching a larger risk to reward ratio. All right. So that's basically it when it comes to market structure and what I'm looking for as far as catching entries. Now we want to consider our top-down analysis. For me, I'm usually either scalping or day trading. So I'm really looking a lot of times at the daily and the 4-hour. But we want to understand that these markets, they're fractal, right? So the patterns that are occurring on the higher time frames are occurring on the lower time frames, and another thing to consider is that the lower time frames will always depend on higher time frames. So basically what that means is that the higher time frames have a greater influence on the direction of the trend. And these higher highs and higher lows, and these lower lows and lower highs that are forming on the higher time frames are more significant and carry more weight than on the lower time frames. Okay, and that's why we need to do our top-down analysis. I have NAS 100 pulled up here, just a clean chart, and basically just want to kind of dive a little deeper into that idea. So if you can't see right now, we are in a downtrend on the monthly. As you can see, we were forming higher highs and higher lows, and then we had broken the higher low here and started creating a downtrend, creating lower lows and lower highs. All right. So when I first just look at this chart here, it's not perfect, but I'm seeing a level of, resistance here, and then there's a support here. So I can kind of bring that down here, and you can see that this level right here could have been a good possible entry if we were looking at the monthly time frame for a retest to the downside, since we are in a downtrend on this monthly chart, right? So let's just go down to the weekly and see if we can find something similar here. I'm gonna pull the weekly one up here. Okay, so after we retested this area here, we came down, created a zone here. We also have some, I didn't tap all the levels here, but we have another zone here. So if we were to just draw that out from that zone, you can see that we had test here, 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 and we're going down. So we're in a bearish trend on the weekly as well. Okay, and so that would have been maybe a good area right here to take a short. We never broke above, and we never closed a candle above there, so that could have been a possible entry there, right? With our stops above that level there, at least 3 to 1, so wouldn't have hit it yet, but we're still in that downtrend. So as long as we don't break above this level here, we're still in a downtrend. And if we go down to the daily, okay, I have it drawn out here. We could see that as far as like a retest, I could see that a lot of people saw this area as a possible area to go long here, but we respected that weekly zone here, and we went down. So as you can see, the weekly zone here, which I usually color code my zones here. So this one, maybe I would make red just to let me know that it is a weekly zone here. So although we had created this support and resistance zone here, it wasn't strong enough to push the market up higher, and so we are still in a downtrend on the daily. Okay, and I guess the point that I'm trying to make here is that when you do your analysis on a higher time frame, you get these areas that become a lot stronger, and when we're looking at them from a lower time frame perspective, the chances of reacting in that area is very high. Okay, so currently at least on NAS 100, we are in a overall downtrend. We are bearish on the monthly, the weekly, and on the daily, right? So probably only be looking for shorts, to be honest. But you trade how you want to trade. Another thing to consider is that each of these candles here represents 1 month, and in that month, in that level from that price of the open and that price of the close, there is a range, and there's you know, trends happening within each of these candles, right? So this is just showing you what it looks like from a higher time frame perspective, the overall like trend, right? So, you know, maybe you're trading like the, I don't know, 15-minute, and so the, you know, monthly isn't as important to you. Maybe you still draw out your levels, but because you're, you know, trading on the 15-minute time frame, you're not paying attention to that level as much, right? But it's still important to do your top-down analysis so that you get a better understanding of where you are in the market, and so that you have a better chance of trading with the trend. And then you can find those zones to use those zones to create a higher risk to reward ratio. Okay. Now that was a lot of information, but if you guys have any questions, you guys can hit me up on Instagram. You could, you know, leave a comment. And last thing I just want to mention is just keep it as simple as possible. You know, trading, it doesn't have to be, you know, overly complicated. You might add in certain indicators and things like that. But you definitely want to have a basic understanding of market structure. And remember, catch the retest. That's what I go for. You might have a different plan, but higher probability with catching those retests. Trade with the trend, be patient, and do not forget to manage your risk. Hope you guys are doing well. Hope you guys are trading, you know, well and making tons of profit. And I appreciate you guys. If you guys have any questions, like I said, hit me up in the comments. Hit me up on Instagram at leftsidetrader. If you haven't already, please subscribe, smash the like button, and I'll see you guys in the next video. Peace.